Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 20 minutes or so. Today will be a short and sweet show here on Options Guide TV. Today's date is April 26th. It's Friday. The markets are open. They're rocking and rolling. And we had a very tumultuous week in the markets and in our own trading here on Options Guide TV, in that we had a lot of wild swings, a lot of economic data, a lot of earnings reports that were going on this week, and all over the board as far as the Meg 7 are concerned. Netflix kicked off, and that goes all the way back to the FANG. They got snubbed by the Meg 7. Who knows what's going to happen going forward with stuff that we have going on with Tesla. And of course, Elon Musk came on out and said a few things to try to drive the stock price higher, and he did. And that has a tendency to happen around earnings with Elon. And their numbers weren't good, but the market went up in Tesla. Google came out, knocked it out of the park. They're finally coming around, and in the AI space, Apple gave them a lot of street cred by backing up their the Google AI product and going into some type of contract with them for the long haul, I guess, longer haul, or the medium haul, I guess is where I would put it. And Google has responded with 8% rise up so far today, and also a strong move on right after their earnings announcement. And then Microsoft once again looking strong. So we had a bulk of earnings that just happened. And now next week, Amazon usually announce. Normally, I would expect them to announce on yesterday, on that Thursday, when one of Google and Apple and a lot of the other companies are announcing. But now they're actually announcing on a Tuesday, so they're changing things up. So for many years, I know they always announced on a Thursday, because I always like to do a one-day trade in Amazon around their earnings report. And they'd usually announce on a Thursday, and then you'd have one day of those options to live on that Friday expiration. So they're going to be announcing next week. We went out and I decided on Wednesday to do a trade on Meta. And we just straddled the market. We were adjusting our SPX trade, our S&P 500 index trade that we did, our skip strike butterfly. And at the end, we just decided, let's do a 50-50 bet in Meta. And we went to the upside. So we just straddled the market and set it up as, well, we're not going to deal with implied volatility. We're not going to deal with time decay. We're not going to worry about that. We're only going to worry about price. And we straddled the stock price. We went $2. It was 5 points wide. So we went $2.50 in the money and sold an option contract $2.50 out of the money, making a 5-point wide spread. And we did it for $2.40. Well, that $2.40 disappeared right away. Meta came out and had awesome numbers, but their forecast just going forward and the spend that they're going to make on AI was what Zuckerberg talked about mainly, I guess. And that's the only thing that anybody heard. And the market tanked in Meta, even though they had probably one of their best earnings reports in a long time. But the stock also had a really nice run heading into that. So people needed a reason to sell it off. Bottom line is that $2.40 just disappeared. And it was literally a coin toss. It was a 50-50 bet. You put the trade in. Either you were going to make $2.60 or you're going to lose $2.40. So that trade just went away. Then we went into the S&P 500 index, and we had a strong move at the beginning of the week that came off in the middle of the week. And so we adjusted our trade, and we didn't necessarily do a standard adjustment in that we didn't roll the spread, the skip strike butterfly out. What we did was sell a spread and make it more of a iron condor, if you will, where we had a short put spread on the downside and a skip strike butterfly on the upside. So I'm going to back off a little bit. Let's stay right where we're at. And I'm going to actually pull up the screenshot of how we adjusted the trade. So I kept that screenshot from the show on Wednesday. So let me grab that real quick, like. All right. And I'm going to swap out here and let's just stay in this a little bit and talk a little bit about this trade. And this trade didn't work out. Well, it did. There was an opportunity this morning to get out of the trade at a profitable price. But let's now run to our screenshot. All right, so this was legitly just captured from the video. We set this up on Wednesday, and if you want to see how we set it up in the TradeHawk software, that's fine. We had our initial trade on, and that was in our what if calculator, and then we added two different legs to the trade. We added the a short put, the 49. Well, let me say this right. Okay, 49.95 put with the same expiration, and then bought the 49.85 put, bringing in $1.50 to the account. We put this trade together. When we put this together, we had a net credit of 70 cents to the account. The market was at 50.60 when we did this. The market had earlier in the day was trading right around 50.70. So that made us a lot nervous because at that point in time, our profit and loss graph was kind of angled down, and there was a lot of risk within the butterfly because we had 2 full days of trading. We had half day on Wednesday, all day Thursday, all day Friday. Okay. So we decided, well, to offset some of the risk or potential loss, let's bring in more credit. So on the downside, we actually went and sold this short spread because it didn't bring in any more margin to the account. We didn't have any more margin requirement because the market can't be up and down at the same time. So the risk parameter didn't change, or the risk of the strategy did not change, but the concept did. So now we needed the stock to stay within the 49.95 put, that strike right there. And we'd ideally want it to be within this one, the 50.80 strike call. Well, guess what happened? We put the trade on, it ran this way, and then came all the way back up through the strike, and now we're trading somewhere in this range. So the moral to my story is that if the market was going back this way and we actually hit this strike, which we did today, we hit our pinnacle of our butterfly. We have 1 day remaining. Ideally, it would have been at the end of the day, but it happened in the middle. It happened before the show. And because of that, you should have gotten out. And it wouldn't have been as big of a profit, but it would have been at least some profit on the trade. Now, I just want to show you where the whole trade is at. So let's go back, and we're going to zoom back out a little bit here. And we're going to go to the TradeHawk software. So very tumultuous trade, to say the least. And we haven't had any of these. Actually, we've done a routinely rinse and repeat with the skip strike butterfly over and over since May, and we've been fine on all the trades. There's only been a couple of trades where we even had to think about adjusting the trade or getting out early. But right now we're at 50.96, but we did run up above the 5100, and that's where the issue is, because that's where you're really nervous about the risk, is right at that 5100 level. So let's go in, and I'm going to grab the trade. Let me grab the actual strikes. We did the 50.70, 50.80, and the 5100. Okay, 50.70. So right here, 50.80 we sold twice, and the 5100 is where we're at. And we're at 95, and now we're down $4.70. So right now, if we put the trade on, we'd be getting a net credit. So if we flip the script and we sold everything and bought it back, this would be a debit. And the debit is $4.25. All right, let's send that to the what if calculator. And I'm going to look at the opposite trade. I can't line them all up in here because we can only do 4 legs sent to the floor. So let me clear this, and we'll go back and look at how much has our what can we close out our short put spread for. But bottom line is we'd probably let that ride for the end of the day. So we'd be looking to make about $1.50 on that trade. But I do think it's nice to know where it's at right now. So we still got a little bit of premium in it on the ask price. If we were to I'll do it just like we set it up. So we sold this one and we bought that one. Yeah, right now we can get out we could get out for 5 cents. So it's basically gone. There is still some premium in this, but they're both trading for very close to the same price. Be a lot to do with the volatility skew that happens in the SPX. So with that said, we can close that out so we could say the $1.50. So if you snoozed on this and you rode it all the way to expiration, you put you would have to make that adjustment, right? But if you snooze today and you didn't get out earlier, you didn't get out as the underlying was going up and hitting your short strike on your butterfly, right now you'd be down 425 on it, and then you would receive $1.50 credit that is basically going to expire worthless. It looks like it's going to expire worthless by the end of the day. So you are down 3 1/4 on that trade then. No, you're down $2.75 on that trade. If I was in this trade right now and I'm flirting with that 5,100 level, like we were definitely earlier, just get out of the trade. That's one of the hardest things to do when you put on a strategy and you put this much effort into a trade and the trade is going against you. Let's say you missed your opportunity to get out earlier today. One of the hardest things to do is to just unwind it and just get out and say, all right, I'll live to see another day. I don't want to take that max loss. The max loss on the skip strike butterfly was 10 points. And I don't want to take that max loss. So if it finished above 5,100, which we're right at that level, that would be the max loss on our butterfly minus the 150. You're talking about $8.50. And that would wipe off a lot of the gains that we've already had in the skip strike butterfly over the last, 5 months or 6 months that we've been doing the show. So that's the approach to it. Bottom line is, the moral of the story is, if you're getting down to the end and it hits that short strike, it hits your 50-80 level, that's when I want to get out. I just want to take it off. It might not be trading for what I'm hoping that it's trading for, right? In other words, a lot of times you'd expect that if it would hit that short strike as expiration approaches, that you might have a real good winner. It literally has to happen in the afternoon on Friday for that to pay out the best. It happened this morning. Trade was profitable. Everything was good. And on top of it, we actually had a decrease in the VIX. So the VIX came down to about 15. When we first put it on this trade, it was trading around 18. So there were a lot of good things happen that were in the trade. It's just it wasn't timely for the actual show. All right. So I don't know. Do we have any questions? If there are questions out there, please put them in the chat box. And if not, we're going to come back next week. We have Amazon on Tuesday. So we'll look at a trade in Amazon on Monday, try to offset maybe what happened in Meta, considering most of the Mag 7 stocks did well that have announced. We still got NVIDIA that's going to be announcing a little bit later, a couple of weeks from now. And so we'll do a trade we'll come up with a trade in Amazon, and we'll look at another skip strike butterfly. There won't be as much economic news. We had a ton of news that came out as far as inflation, CPI, PPI, just all over the place with all of our numbers this week. The probability of the Fed raising interest rates dropped dramatically now I had a note here on this. Let me highlight that. So now July is a 33% chance, and we're going all the way out to September before we have a decent likelihood of a Fed rate cut based off of the CME Fed Watch tools. All right, that's it. So hold on to the reins over the weekend, and we'll get back to things on Monday. A very volatile week in the S&P 500 index, and we still have more earnings coming and more economic data. So next week will be very interesting. Hope to see you Monday on Options Guy TV, 11 a.m. Eastern time.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.